Hello everyone, very good morning. So in this video lecture, we'll be looking into the numerical part of the balance sheet. So we'll try to understand the numerical part with the help of an example, with the help of a numerical, we'll understand this balance sheet as per the Companies Act of 1956. So in the previous video, we have seen the basic format of the balance sheet as per the Companies Act of 1956. Now in this video format, in this video, we'll try to understand this whole format with the help of an example, right? So I believe that you all have seen this format. So this was the format wherein you have seen that on the liability side, we have share capital, we have reserves and surplus, we have secured loans, right? We have unsecured loans, and also we have current liabilities and provisions. Whereas on the asset side, we have fixed assets, we have investments, we have current assets, loans and advances, right? Then we have miscellaneous expenditure and profit and loss account. And as per the accounting equation, the asset side of the total of asset side will always be equals to the total of liability side, right? So this was the format, horizontal format, wherein we have understood the format of balance sheet. Now let's jump into the example and try to look into the example part, right? So when we talk about this, so let's see the example. So in this, we have the extracted balance sheet of Vintage Manufacturing Company Limited, and we have the data in front of us, right? So you see on the left hand side, we have the data, we have equity share capital, we have general reserve, we have profit and loss account, then we have debentures, short-term bank loans, right? Then in short-term bank loans, you can see that in the bracket, it is given unsecured loans. Then we have sundry creditors, provision for taxation, proposed dividend, land and building. Now the land and building, the actual cost is 5 lakh rupees, whereas the depreciation was applied on this 5 lakh, that is 50,000. So we'll have to deal with the depreciation part also. So the moment we subtract the depreciation, we'll get an amount of 45,000, right? Sorry, 4,50,000. Same way in the plant and machinery, furnitures, because these are tangible assets. So herein we apply depreciations also. Then we have investment in government bonds, then closing stock, sundry debtors, then cash at bank, cash in hand, advance recoverable, preliminary expenses, and discount on issue of debentures. Now, this example says that we need to prepare a balance sheet as per the Companies Act of 1956. Now, let's look into one by one. So, what we'll do is that we'll try to solve it. First of all, we'll try to identify that these items goes on which side, and then put the values of those items under their respective heads. So let's look into the first one. So we have equity share capital. The moment you look into the equity share capital, so the amount is 8 lakh rupees, right? So if you remember the format, so equity share capital is shown under the heading of share capital. So herein we'll write down this 8 lakh rupees, right? Then we have next is general reserve. Now the value of general reserve is 1,50,000, right? So just do the equals to, go there and click on the tab, you'll get 1,50,000 over here. Then see, they have shown the profit and loss account credit balance, right? Now, if we are showing a profit and loss account credit balance, what does that mean? So if we are showing a profit and loss account credit balance, that means it is a balance of a profit. Okay, so this is a profit balance. So we have a profit. So I'll just write down this over here. So equals to 80,000. That is done. Then we have 10% debentures. Now, when we talk about 10% debentures, and this is secured against their plant, right? So it is being secured by a physical asset, and the physical asset is the factory or the plant that has been set up, right? So this 10% debenture is rupees 3 lakh. So I'll just go to the debenture part, do the equals to sign, and just click on this tab, and we'll get the value, right? Then you look on the fifth item. The fifth item is short-term bank loan. Now see, in the short-term bank loan, it is written unsecured. So if you could remember, so let me go through the balance sheet again, format again, and you could remember. So we have the categories of secured loans and unsecured loans. So you have seen over here that in secured loans, debentures, we have seen the debentures which is backed up by a plant, right, which is secured by a plant, and thereby we have shown debentures under the category of secured loans. Whereas in unsecured loans, that means which is not being secured by any of the assets, so that will come under the category of unsecured loans. So here in this example, if you could see clearly, the bank loan is said unsecured. So thereby we have created a separate category of unsecured loans in this. So we'll put this short-term bank loan under the category of unsecured loans, right? So I'll go to this tab and click on here. So we'll get a short-term bank loan, which is unsecured. Then see, we have sundry creditors, point number 6. So in sundry creditors, we have the amount is 1,20,000. So sundry creditors are a part of your current liability. So we'll put this under the category of current liability. So under the current liability, we have sundry creditors. We'll put equals to and click on this tab. Yes. So we got the value of 1,20,000. Then you see you have a provision for taxation. So that means if you could remember the format again, I'll just go through the format. So you see in the current liabilities and provisions category on the liability side, you have two categories, that is current liability and provisions category, right? So in current liability, there was only one item, that is sundry creditors. So that item you have shown in the current liability. Now, wherein when you go to the provisions, you'll see that how many provisions are there. I believe that there is only one provision and one proposed dividend is also given, right? So we have provision for taxation and proposed dividend. These two items will go under the category of provisions. So one by one, we'll put the value of these two under their respective heads. So we'll go to the provision for taxation, right? Mark equals to over here and then go to the respective tab, the value tab, and put enter. And we'll get the value. Same for the proposed dividend. So proposed dividend, again, we'll go to the respective value of proposed dividend, 80,000, and we got the value, right? Now look into the next one, that is land and building. The moment we talk about land and building, so land and building is a part of your asset. So that means we'll go to the asset part and we'll look into the land and building category, right? So see, in the land and building, it is a part because we have seen in the format also, land and building is a part of asset and it is a part of your fixed assets, long-term assets, right? So in land and building, you see the cost is given 5 lakh rupees, whereas your accumulated depreciation is given 50,000. So your original cost is 5 lakh rupees and the accumulated depreciation was given separately. The depreciation was given 50,000. So that means this two value, 5 lakh rupees and depreciation, would be adjusted in the internally, and then the final value will be written in the outer column, right? So in this case, what we'll do is that we already have done it in the internal category. So original cost was 5 lakh, and you see in the internal column, I have also written depreciation. Now, if the value is reducing, if the value is going down, then we need to reduce this value to know the exact value of the land and building, right? So the exact value of land and building is 4,05,000. So the moment we put equals to, we'll get an exact value, that is 4,50,000. Sorry. Then we have the plant and machinery category. The moment we look into the plant and machinery, again, we'll see the original cost is 8 lakh and the depreciation value is 1 lakh, right? So that means the total value will come out to be 7 lakh. However, in the question, it has already been calculated, wherein might be possible that whenever you get in the examination, might be the possibility that this calculation would have not been done over there. So you need to do that calculations by looking into the values, right, in the adjustments category. So you'll find out some adjustments figure. So those adjustments will be done separately by you, right? So this is for your understanding that how these points, these figures will be put into the different categories of assets and liabilities, and thereby I have taken these examples. Now the next one is furniture. When we look into the furniture, now look the furniture part. So in the furniture, we have the cost, original cost is 50,000 and the depreciation value is 20,000. So that means the value has got reduced again. So in this case also, the total value came out to be 30,000. So we'll mark equals to, go to the respective tab, put enter, right? Then the next one is 12th point, that is investment in government bonds. See, investment in government bonds. So when we are looking into the investment in government bond, it is also a long-term investments. So these investments, the value of these investments will go into the investments category. So the value is 1 lakh rupees. So directly we'll put this value 1 lakh over here. Then the next one is we have closing stock in trade. Now the closing stock in trade, the value is 1,50,000, right? So if you look into the format, the closing stock in trade we used to show into under the category of current assets and liabilities. Stock in trade, you see over here, right? Similarly, we'll show this value under the category of stock in trade. So what is the value of stock in trade over here? So if you look clearly, the value is 1,50,000. So equals to 1,50,000. Then we have sundry debtors. Now it is already been said that the sundry debtors which is outstanding more than 6 months, right? So in this case, we have the outstanding value of 20,000, whereas we have some other debts also, and the other debts value is 90,000. So what we'll do is that we'll try to add these two things, because already we have the debts, and again some of the debts are also again got outstanding. So already we have a debt of 90,000, and apart from this 20,000 outstanding debt I can see is more, I mean, outstanding from last 6 months. So that is also been accumulated. So the total debt, sundry debtors, came out to be 1,10,000. So 1,10,000 will copy here. Then coming to the next one, so we have cash at bank and cash in hand. 15, point number 15 and point number 16, you can see. So when we talk about cash at bank, cash in hand, so if you look into both these items, so these are the part of your cash and bank balances, which comes under the category of current assets, loans and advances. Again, we are going to the horizontal format, and you look the format over here, and you see the cash and bank balances, right? So this is the cash and bank balance. So under the category of cash and bank balance, these two items will come in, that is cash in hand and cash at bank. So we'll copy these values over here. So we have the cash at bank and the amount is 60,000 over here. And then we have the cash in hand, the amount is, we have 10,000, right? So what we'll do is we'll mark equals to over here, and then we'll put 10,000. Copy this value, right? Then apart from this, we have the 17th point, that is advances recoverable in cash. So that means some kind of an advances you might have given to the person, and that will be recoverable in form of cash. So those will come under the category of loans and advances. So you just put equals to over here, and under the loans and advances, you write down this and mark this value. Okay. Then apart from this, we have two other points, the point number 18 and point number 19. And these are our miscellaneous expenditures, that is preliminary expenses and discount on issue of debentures. So if you are issuing a debenture and you are giving any kind of a discount, so that discounts will come under the category of miscellaneous expenditure. Whereas any kind of an expense, preliminary expense that you have made, and the benefit of that you'll avail in future, so those expenses will also be come under the category of miscellaneous expenditure. So you just mark this value over here. So I'll just copy the value, equals to, and tab enter. And the last one is equals to, and this discount on issue of debenture, 10,000, right? So if you could see clearly, so all the values has been correctly mapped and copied to their respective heads. Now when you look into these one by one, so see at the end you get a total, both the side total equal, right? So that means your 1,68,000 of liability side is equivalent to your 1,68,000 of your asset side. So both the balances got matched, and this satisfied your accounting equation. If you could remember clearly, what is the accounting equation? Accounting equation is assets is equals to your equities plus liabilities. Let me increase the size of this so that everyone can see. Assets is equals to equities and liabilities. This is our accounting equation, right? And this accounting equations is got satisfied over here. Yeah. Let me also write down equals to, and this is what we called as accounting equation, right? So accounting equation clearly says that the asset side will always be equivalent to your equities and liability side. So left hand side is your equities and liability side, whereas the right hand side you can see is your asset side, and both the sides total is getting matched, right? And it will get matched, it will get balanced by default. You need not to do anything extra in it, so no balances will be left over here in the balance sheet. Balance sheet automatically will get matched by putting all the values. If your balance sheet is not matching by putting all the values, all the information, that means there is some error or some mistake has been done, right? By at the time of your calculation, or some human errors has been done over there. Otherwise, by default, accounting equation says that by default your assets and your liability side will always get matched automatically when you put all the values clearly, right? So I believe with this you might have got a brief idea about how the old format, how to solve numericals under the category of old format. Okay, so with this I believe that you have this idea in mind that how to solve this format. Now in the upcoming video we'll look into the we'll understand the new format also of the balance sheet as per the Companies Act of 2013, and we'll also look with the help of an example that how to solve the balance sheet under the Companies Act of 2013. So thank you so much for joining with us. Thank you and have a nice day.